Hello guys, just want to come on here and give you a weekly review. Today's Monday, February 9th, 2026. We don't have any news today. I did some tape reading this morning. I'm in a trade, which I'll get to later. But first, I want to give you last week's trades and a outlook for the upcoming week. So my model is 9:30 to 11:30 on economic calendar days that have the red or orange folder in the AM session. So Monday, Wednesday, Thursday, Friday. And also, specifically with the days that have 10 news, I'm waiting for 10 to drop before entering a position. So that being said, that's how you can use the calendar to kind of like a work schedule. So Monday, I'm interested 9:30 to 11:30 post 10 o'clock. So if we go to Monday the 2nd, you can notice at 9:30 we are displacing higher. We make our first 2022 model here. Low high with a fair value gap and this fair value gap here in discount. We never retraced, but then 10 o'clock comes when the news drops. We make another leg long, low high, fair value gap at 50%, enter at that fair value gap, stop at the low, target a 2R. So I always target a 2R or an hourly liquidity. So if I go to Monday the 2nd and I go to an hourly chart, okay, 9 o'clock, 10 o'clock candle, I'm asking myself what hourly POI. I see this H1 sell side above price. So it would look like that. And that's why I don't get fancy dancy and target that H1 liquidity, because I'd rather just get out like right here. That's a 2R liquidity objective below my hourly draw. So I usually look for an hourly liquidity pool or a fair value gap, and then I'll go on the M5 and then I'll refine my targets to 2R. So like if that hourly liquidity is 2.2 and I can lower it to something below that hourly high, or this imbalance here, the premise is the same. I'm gonna go down to the M5 and scan this imbalance. If we're going long into this internal, I can target an M5, maybe a small fair value gap within that. So that's how you can use the premium discount on the M5 within internal range liquidity and external range liquidity. So that's Monday's trade. Notice it formed after 10 o'clock news dropped. And to show you, this is that H1 internal range. So for example, there's this fair value gap within it. So like, I don't know, maybe Wednesday we made a long here, right? Just an example. Make it long, and you put your stop in the appropriate place, using the appropriate fair value gap, and then you target this M5 imbalance within this H1. So that's just a little sneak peek on how I refine my targets intraday. So that being said, we had news on Wednesday, 10 o'clock. So same thing, 9:30 open, no displacement. I'm waiting for 10 o'clock to drop. 10 o'clock, the leg is formed, high to low, fair value gap pretty much at equilibrium. Enter at the fair value gap, stop at the candle 1, target We'll go to an hourly. There's nothing obvious besides this, which is not 2R. So I'm going to go to a daily chart. Zoom out. Oh, okay, I see this low. I see this imbalance here. There you go. See? That low, just about 2R. So I'm going to target that 1.93R. And I'll take that every single day of the week. So again, using time and displacement and proper entries and stop losses, and then our time frame to gamify it, which is the hourly, and using the daily chart for our directional buys that day. So also we make another short high to low here. I know I'm going fast, but these things really just, I can just see them like automatically now. So short here, stop at the first candle of the fair value gap. So what I'm saying is there's a fair value gap formed at 11 o'clock. If this formation takes that candle, this candle, and that candle, that's a 3 candle formation. I'm putting my stop loss at the first one of those 3 candles. And I'll get into examples where there's a massive fair value gap, and then that's when I will use that stop loss. But for now, always look for that first candle and then go to your hourly chart, and then we're fine on the M5 if need be. So there's a second possible entry. If I target that hourly sell side, I'd get 2.5R. That's in an example where I just targeted 2R. No fancy dancy, just give me my 2R and get me out. So that was Wednesday. Now our next possible day is Thursday the 5th. So same thing, 9:30 we displace higher. I just want to draw that out in time so you can see how this reacts in the future. So I'll put a vertical line to delineate the news for that day. Notice I'm not entering. This is a valid model long, but I'm not longing in reaction of the news, if that makes sense. I'm not going to long here and then want to sit through this volatility. So I'm going to let that drop and then the displacement form a story. So 9:30 we make a long, we fail that model, the news drops, and we displace lower. That's where I draw my high to low. Technically this fair value gap's at 50%, but do you see how the actual midline is above consequent encroachment of this first gap? That tells me that it wants an OTE entry and the higher fair value gap. So that 9:30 fair value gap and this fair value gap interlap, which gives me a very good confluence to short this fair value gap, put my stop at the high, and then ask myself, what can I target intraday? So enter here, you get filled at 11:30, and then I'm going to my hourly chart. Okay, what can I target? Well, that low gives you about 1.7R. You can target just beyond it for a 2R, and I can get even more technical. I can see this sell side here, so I can ask myself, okay, well, what to the left on the hourly chart is above this daily sell side, which I'll make red. See that daily low? I'm on the hourly chart, I'm scanning price. Okay, that's an internal range hourly high I could target. So you can target the edge of the leg for 1.7. You can target 2R, or you can target that hourly sell side for about 2.3R. And notice how it attempts to make a run for that daily sell side objective. So really this just becomes a personal preference. Me, I would have just targeted a 2R here. So that was Thursday. Now we'll go to the last day of the week, Friday, 10 o'clock. same thing. 9:30. Well, first, let me draw my vertical line. 10 o'clock. So this was a tricky day where usually I would say I don't consider 9:30 displacement on 10 o'clock news days, but you would have to see this form live to understand why I anticipated this. So we'll go to Friday. Friday at 9 o'clock, I'm looking at hourly institutional order flow from overnight into the AM session. So I'm seeing hourly PD arrays, internal range order blocks, this internal range hold, and then I'm looking for these hourly highs here. So I'll just put one at that highest one for now. So now we go down to the M5. We can kind of visualize it and see how this is respecting as like support. This is overnight, and then boom, New York hits. We sweep all these lows, tap this hourly internal at 9 o'clock. I'm waiting for that 10 o'clock news to drop before entering, but here's where the context comes in. The bullish narrative is here. We're displacing higher. We're making a model long at 9:30. Notice I'm not holding through news. At 10 o'clock, we open. Look, open here. We open at that blue line, and then we drop down into this. Now this requires a little bit more, what do you call that? Optionality, because I would really recommend to consider displacement after 10 o'clock. 10 to 11:30, I'd look for my model long. So like we got one here, but we never filled it, so that would have been my opportunity for that day. But I noticed at 10 o'clock we open, we're not really having a volatility spike, so I set my limit here quick because I have the long bias. I have all this narrative in mind. At 10 o'clock we're not massively taking liquidity or displacing. I notice we open and we kind of just slowly fall down into that 9:30 model long, and that's when I enter here. And here I'll go to hourly chart, and I looked at, I think it was this high here. Yeah, so again 2.6R. I'm gonna go on the M5 and I'm gonna look, okay, well what high gives me 2R? Well, the edge of the leg gives me 1.5, so I'm gonna obviously ask myself, well, what beyond that gives me 2R? And I'd target that M5 high, this AM session high from Thursday, and get my 2R there, and objectives hit by lunch session. So Friday was a bit tricky, required a little bit more flexibility. But the concept's the same. I'm going into every day using this as my roadmap for the week. I'm letting that 10 news drop and noticing we're making a model long and saying, okay, I'm comfortable taking this setup. To whereas 9:30 we come down into it at like 9:55, right? And we're knifing through that fair value gap. So it requires like live discernment. So like at 9:30 we're making that same model long we made on Friday, but at 9:55 we're closing below that fair value gap. And then 10 o'clock the news drops and we displace. So that tells me right away my longs are not working here. I'm going to start shifting my bias to shorts. And then that's when that model short was formed, and I would have looked for that premium entry in this fair value gap here, aligned with that 9:30 IFVG, and I would have went short there. So the concept is the same. I'm using the news as the roadmap. So letting time and displacement kind of tell you where they want to take the market intraday. That's all my model captures, and that's all ICT teaches on his ends model, using this entry mechanism. So that being said, I want to come on here and give you that, and then also show you what we're going to do, looking for this week. So Monday, no news, which is today, which I'm making this video. We have news tomorrow, Wednesday, Thursday, Friday. So go down to a daily chart, or weekly chart rather, and I'm just gonna draw, where do I think this week's gonna go. We've been in this consolidation. As a framework, I can just use the previous candles high and low. That gives me a range. I can go down to the daily chart and refine that range. So today is Monday. This is today's candle. We're on Friday. We print into that daily internal, and we also have this volume imbalance here on the daily chart, which is useful for today's trading, the current day. So this is the range we're working within this week. Depending on how we close today, I can shift my bias using previous day high, previous day low, but this is the range I'm working with for this week. If I go down to an hourly chart, today's morning session, I'll just give you a recap of this, but since I already gave you the weekly recap. At 9 o'clock, we take hourly sell side. Here, let me log back in to my trades so you can see. I just use demo to practice. Here. Perfect example. At 9:30, we sweep that low. We make a model long. Here, let me get rid of that hourly fair value gap. So this fair value gap's at 50%. So this is an example where the wick, if you notice a wick like this in a small body, I'm comfortable putting my stop at this low because this wick is all rebalanced. So could have entered here, stop there, target 2R, or this hourly buy side, this hourly buy side. Okay, so that's obviously 1R, so then I'd look to the left between those two. Okay, I see that gives you about 1.7. This fair value gap, which we just printed to, which I was targeting this morning for about 2R, and I had taken partials off here if I'd longed that. But then again at 10 o'clock we make another long here, two fair value gaps. The upper one's at below 50%, so enter there, put my stop at the low, 1.6R, take a partial at that fair value gap. Next objective, that M5 high within the H1 buy side here. So the game is the same even on no news days. Like, I'm just tape reading. This is not real money, but because I enjoy the craft. But every day gives you a treasure chest. It just prints differently every single day, long or short, using this entry model, and targets and intraday PD arrays. So just a little sneak peek into today, what I was doing today, and how to approach this upcoming week. So that being said, good luck and good trading.